Our market master of the day is Mihir Vora, Director and Chief Investment Officer at Max Life Insurance. Mihir, good to have you with us here. Almost a little bit of consensus. I mean, I think it's an overused word, consensus. But for what it's worth, the view which is emerging is that maybe we are set for a bit of a relief rally. And why not? At least year to date, the market here has done very poorly as compared to global markets. With no real big issues at home. Maybe growth at the margin has been slowing. Earnings revisions are still not turning up. But no big issues like what we've seen out there in the West. Do you agree with that view?
Yes, good morning. Relief rally seems to be the right way to summarize this. And, even in the US, after the Silicon Valley Bank issue, the way the Fed has backstopped the liquidity and the deposits means actually it's kind of a stealth quantitative easing, so to say. The Fed's balance sheet has gone up dramatically in the last couple of weeks post SVB, Silicon Valley Bank, and that also is adding to the sentiment. And we did see interest rates, come down even globally, which is some kind of a risk-on kind of a sentiment at this point in time. That's the way it is.
Okay, by the way, just want to mention a couple of more stocks. We're talking about IT stocks. KPIT Tech has really been the star of the show amidst all the volatility. It's one stock that has not given up on its rally. In fact, KPIT Tech today is at a fresh high. It's at 932, which is a gain of almost 35% this year. And it's a fresh 52-week high, and it's a 4% rally. So that's a 52-week high there. Apart from that, Ultratech Cement, KEI Industries, Godrej Consumers, a couple of other stocks that are sitting at fresh 52-week highs. Since we're talking about the IT names, Mihir, I wanted your thoughts here. We're heading, sort of full throttle into the IT earnings now in the next fortnight. What is your expectation this season, and how are you feeling about IT? Are you bullish, bearish, cautious?
I think IT is a sector where we are still cautious, underweight, and that's because of the fact that in spite of all the outperformance, etc., that we are seeing in the Nasdaq, IT services probably will continue to see the fact that the best is behind us. We try to club the Nasdaq along with Indian IT services, but if you see most of the FANG stocks, the big Nasdaq stocks, are all consumer-facing stocks. They are not really B2B. What Indian IT services cater to is B2B, and that corporate spending is likely to have seen its peak in 21 and 22. So to that extent, the kind of growth that we saw in the last couple of years is not going to get replicated. We would still rather stick to the domestic theme.
Still stick to the domestic theme. Any thoughts, Mihir, on this entire defense space? The flurry of orders for BEL seems to have done the trick. I mean, I think kept hopes alive that orders are not slowing or anything. And in government orders, obviously, right? I mean, it's a little lumpy sometimes, but orders have come through in large degree.
Yes, these were expected. I mean, I'm sure somebody was just waiting to sign some files. It seems to have happened at the last day of the year. So this is in line with the government's initiative to, continue to ensure that we get more and more production done domestically. And both the public sector and private sector defense companies should continue to benefit.
Okay, big moves coming in over there. Garden Reach Shipbuilders, Cochin Shipyard, all up over 6%. What else do you like, Mihir? You said you're still a bit cautious on the IT sector, but any other spaces that attract you now? Anything where you see both valuation as well as earnings headroom?
Sure. So the private sector financials and even a couple of public sector banks are quite well poised on a growth versus valuation parameters. So those are the spaces that we are positive on. Local capex and local investment and infrastructure theme is also something that we are positive on, and that includes construction, engineering, capital goods, and of course some of the defense names. And the PLI linked sectors, some of them including chemical, specialty chemical companies, are spaces where we see secular growth. I think the broad theme is that this year is going to be a year of uncertainty because of local and global factors. So we are not taking huge bets on sectors and stocks, but rather trying to pick opportunities as and when they come on stock specific or sector specific calls. So it's more of a pick and choose strategy rather than very skewed portfolios.
Look at Policy Bazaar. Policy Bazaar, the PB FinTech saw a large move on Wednesday, and I think it's starting up about 4% once again. For the week, it's up some 11-12%. There is a PB FinTech on your screen, 3.5 this morning, 644. But it's not a sort of new age sort of stock move like what we're seeing out there in defense. Nykaa, for example, is down 7-8%, so it's very specific. Paytm also, by the way, has come up in the last 2-3 weeks or so. Stock started rallying even before this entire PPI, UPI news came through. Mihir, have you increased exposure to banking names, large private or public high-quality banks in the correction that we've seen?
Yes, a little bit. But as I said, in terms of sector calls, we are not taking huge sector calls because of the uncertainty in the market. So I would say that we have reduced the risk in the portfolio related to the benchmark. But we are going more and more stock specific.
Oh.
Mihir, what about cement? In the month of March, I understand, the second half of March, demand was waning. Particularly post-Holi, we didn't see any kind of traction on the ground, which was surprising actually because otherwise demand was shaping up well. Prices, though, have been disappointing. However, I've checked out with various industry participants, and come the first week of April, the price hikes are likely to come about. Unsure whether they sustain. How do you approach this space?
See, valuations in this space are quite okay, except for a couple of stocks which are on the expensive side. So valuations apart, I think industry keeps trying that. They keep trying to compensate for volumes by hiking prices. And if the market's good enough, they stick. But in general, to your theme of slowdown, one of the reasons why we are a little bit, de-risking ourselves, not taking huge bets is the fact that, as you rightly mentioned, not only in cement, but across sectors in the last month or so, we are seeing some signs of even consumer discretionary demand slowing down. So to that extent, we are trying to kind of make sure that we get it right and not get stuck on the wrong side. In case the slowdown persists, then we might have to take a relook at the stance. So as of now, we're going with a neutral to cautious kind of a stance.
Just one more word on the defense names. Both defense and railway stocks, actually, all of them are up and about. In case you've missed out on this rally entirely, right? I mean, I was talking about how RVNL has doubled in the last 1 year. Cochin Shipyard is up 6%. BEL has done exceptionally well. If you missed out on this rally entirely, is there still more scope to go?
See, this seriousness with which the government is approaching domestic manufacturing is here to stay, whether it's in railway or defense. And if we think that defense indigenizations can go from 60% to 75% or even larger, and similarly the way the railways is almost tripled its expenditure in the last 3-4 years, I think the government is hell bent on making sure that we do things domestically. And we have seen that typically, once the ecosystem in a particular industry develops, then even exports become more competitive. In the defense space, for example, also, we are already seeing traction in exports. So once we have a critical mass, once we have economies of scale, then the whole world becomes your market. And to that extent, these themes might be multi-year themes.
Okay, multi-year themes. All right. On that optimistic note, Mihir, thanks a lot for joining and have a great weekend. And there are, of course, there'll be many opportunities in future to speak. So until we speak again, have a good one. Well, for the market, looking pretty good, actually. 200 points.